Happy Red Friday, low VA rates fans, followers. If you just stumbled across this video, the reason I wear red every single Friday, along with Kristen, who's in here, and other employees, is it is something we do. Oh, subscribe. Right down here, there should be a red button. I'm trying to get in the swing of this. Subscribe to our YouTube channel so that you will be notified every time we upload these very informative and hopefully entertaining videos. So back to my story as why I'm wearing red. We wear red. It stands for remember. That's the R. Everyone, that's the E. D is deployed. Remember everyone deployed. This is our outward expression of a very, a flame that burns inside here at Low VA Rates. We love our military, and every Friday this is how we dress. Let's get to the informative video that I just told you you should be enjoying. We're going to talk today, that we get this question all the time from veterans. Let's see, that marker's going dry. Let me try to grab another marker. I'm going to go green. Let's see here. Should I go non-VA? Okay? It's a good question. I don't know if that green shows up real well. Anyhow, we're going to make it work. Should I go with a non-VA loan? Well, what sort of loans out there are there? There are FHA, there are conventional, there are USDA, and there are other types, okay, that have all sorts of other names. Okay, those are the types of loans that you could consider getting as a veteran. But let's go back to this question. Should I go non-VA? I'm telling you what, I've been racking my brains all week since my team said this is one of the things we're going to talk about this week, and I come up with the same answer. I don't know any logical reason why a veteran would use a non-VA loan unless they are not eligible to get a VA loan. And that happens for a plethora of reasons. You didn't serve long enough. Maybe you didn't get the right sort of discharge when you left the military. Those are kind of some negative things. Maybe you've already got a VA loan back in California. You bought your first home after college. You used your VA benefits and it's been a rental property the entire time and you've exhausted all of your entitlement. There are reasons why you would not be able to get a VA loan. So I would rephrase this question. If I'm eligible or able to get a VA loan, is there ever a reason why I shouldn't? And I honestly can't think of a reason why you would not use your VA loan benefits. Okay? Hopefully I can clean this up a little bit. And I'm going to look for a little darker marker. Maybe this red will work. Let's just reiterate why the VA loan is so great. No money down. Okay? No money down. Now you may say, yeah, but Eric, I've got $200,000 in the bank and I want to put it down. Well, you can still put money down on a VA loan. There's no reason that you can't. Some people say, yeah, but I don't want to pay the VA funding fee. If I put money down on a conventional loan, there's no VA funding fee. Okay, that's true. However, the more money you put down, the lower that funding fee becomes. There's no way to get around the funding fee unless you're a disabled veteran. So I guess if you're a disabled veteran or you're receiving disability benefits from the VA, then there really is no reason ever. I'm going to go on the record and say if you've got 20% or more to put down on a loan and you have to pay the VA funding fee, that could be a financial reason to not use your VA benefits because you will save a little bit on closing costs. But that funding fee comes down so low, the more you put down, that the other benefits of having a VA loan, in my opinion, still likely outweigh that small funding fee. Some other things that are great about a VA loan that the FHA and the conventional and the USDA and the others don't have is, well, there's no mortgage insurance, okay? Again, if you put 20% down on a conventional loan, you're not going to have mortgage insurance. So for those of you that have 20% to put down or more, you're going to have to make a decision. But USDA has monthly mortgage insurance. FHA has monthly mortgage insurance. Here's another one. 100% cash out. So you may not think you want to tap into your equity, especially those of you that have $200,000 to put down. But the economy changes. Your financial situation is great sometimes, maybe it's not great others. If you ever got in a position that you wanted to get the equity out of your house, conventional, USDA, and FHA all have limitations on how much money you can pull out. VA, at this point, still allows you to yank 100% of the equity right out of your house if that's something you decide to do. Let's see. Another thing that I love about VA loans, and we talk about this a lot, It's the IRRL, okay? It's the Streamline, or the interest rate refinance reduction loan. Interest rates are super low right now. If you would have gotten a conventional loan or an FHA loan or a USDA loan instead of a VA, it will be much harder for you to take advantage of these lower rates than it will be a veteran. Last thing that I would probably add to this as to why there's no reason to really get a non-VA loan if you're eligible for one. I'm telling you right now, we look at interest rates on the daily, sometimes hourly. VA rates are just lower, okay? VA equals lower rate. At least at low VA rates it does. Our FHA rates are not as good, our conventional rates aren't as good, and our USDA rates are not as good. Use your benefits. If you disagree or you've got questions, comment below. We'd love to have an interaction with you right here where everyone can see it. Thank you.